Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly. Fantastic. I like the energy, Captain G. Yeah, let's do this. As always, of course, before we jump on the left side of the screen there, make sure to read through the live trade room morning prep PDF. Very important to go through and understand everything that's inside there. If you aren't a member of SSFTG or a part of the YouTube family, check out the join button below the stream to gain access before our next private webinar, which we just actually announced what the topic of that webinar is going to be. We're going to be going over order flow and utilizing it for points of interest. So it should be a really interesting webinar. Anyway, before I jump down the rabbit hole on that one, that's something that is definitely that you can click the join button below the stream and you can gain access for those private webinars, get access to the Discord chat, not to mention the cool badges and stuff next to your YouTube name so you can show your support and all that awesome stuff. If you're trying to figure out what it is exactly that we are doing here in the room, look no further than the Day Trading Academy over on SSFTG. It comes loaded up with 19 plus hours of material, and that continues to grow, not to mention everything else going on in there with the deep dive and all of the other courses. Tons and tons of material. Please keep in mind, if you are on the YouTube side of things, the broadcast on YouTube does have between a 3 to 30 second delay or so, depending on where you're logging in from. But if you do want to level up to the VIP status, you can enjoy the exclusive permanent access to our non-delayed live analysis stream via Zoom Direct. That way, you don't have to worry about any of the delays or anything like that. And plus, as a VIP, you gain access to the monthly VIP webinars, private VIP events, one-on-one scheduling access, all kinds of cool stuff there too. So whether you're here and you're totally new, or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. Let's take a look at some charts, take a look at some news, see what's going on for today, and we can start diving in and see what's going on. Obviously, make sure to grab the morning DP levels. Those are there for you over on SSFTG. We've got them for the major markets that we trade. And one of the big things starting off across the board here, before we get into the charts, is the news. And obviously, looking at the news calendar, earlier this morning, we finally had some big news. It's been a minute since we've had some bigger news, but we did finally get some. The core retail sales earlier this morning at 8:30, better than expected by a lot, 8.4% versus the forecasted 5%. Initial jobless claims came out 576,000 versus the forecasted 700,000, so way better there. The Philly Fed Manufacturing Index came out at 50.2. The forecast was 42, so pretty good there. Lots of really good news in terms of solid numbers. Retail sales came out better than expected, 9.8% versus the forecasted 5.9. So, I mean, even though the markets are at all-time highs and it just doesn't want to pull back, when it does, all of a sudden we get hit with all this really good optimistic news. And, well, I mean, what do you think the natural response is going to be? It's right back up again. If we look at the news going into today, well, we don't really have anything else going on. All of the big news is at 8:30. We've got some medium at 9:15, industrial production. That's really about it. 10 o'clock has the business inventories month over month, and then we also have the retail inventories. But there's not a whole lot going on. Some FOMC members speaking at 11:30. We've also got some this afternoon. All the big news is done. Jeez, I just looked on the right side of this thing. It's just strong sell across the board. Anyway, so taking a look at what's actually going on here on the charts, looking at the NASDAQ, one of the big obvious things, if we're looking at the measurement of volume from the bottom of the move to the top of the move, it wouldn't let me measure up here because of that weird data feed problem, but it did let me go up to this point. That still creates a very obvious POC. And we can see what happened. The market pulled back, two-legged correction back down. They missed the completion of those two legs. And, well, it didn't seem to matter because we hit that volume and it stopped it dead in its tracks. And if we increase the volume a little bit further forward to gauge, what the response to that was, this builds a much more obvious picture. They filled it in heavily, so much so that it continues to be accumulation volume on the downside. Again, we get this dip and buyers just buy it and it goes right back up. What a shock, right? So we finally got a halfway decent pullback on the NASDAQ and the S&P and kind of everything. immediately bounced right back up again. And from the S&P's perspective, we had a really nice pullback. It tested the bottom of the channel almost to the tick and then ripped right back higher. They haven't made it back to the new highs. They haven't made it to a wedge high. There are some definitive concerns still. I mean, we did make a new high, so that's good. But if we're looking at the MACD side of things, the MACD still has not made a new high. So we still technically have a bit of divergence. It's not proven yet. It's still very early. But that's still, we're dealing with the 3-press top, fully diverged across the highs with a big undertow. If it starts failing and bursting lower, then, I mean, realistically, sellers are going to be looking for a couple pretty strong legs down. So far, it's still obviously bullish. So we got to give them the benefit of the doubt. On gold, we had the good old Mac whack on this reversal move back to the upside. Came in on the dip at around 10, 11, 12. They came back again at 215. They came back again at 2200 last night. Just a couple times, no big deal. Once they finally vindicted that low enough to get everyone out of the way, that's when they chose to decide to get the rally back to the upside and finally made a new high. Kind of. I mean, when they made the new high, it was a total failure. So it doesn't exactly prove a whole lot, but the buyers are in long from way down here. So, the failure up here, it's not necessarily going to be that concerning. They still have rising support. There's still a lot of things to back them up. But it's not great seeing it fail above those highs. It's kind of a bummer. Any previous swings give us any extra info? That would be the one right there, actually, wouldn't it? That's about as obvious as it can get. Well, there's the wedge, at least for now. As far as reversals off the low, we did have a really shallow one, but it was an L4, L5 reversal, which is a good location for a reversal. It's proof. They continued back up, tried holding an L1, L2. I mean, it barely made it above the highs and then rolled all the way back over. That rollover came all the way back down to a picture-perfect L4. And then from there, it's been higher, low, higher, low, higher, low, higher, low, and off to the races. So now that we have an L4 and a continuation break back to the upside, although it is weak, buyers are going to be trying to hold this first L1. This is where they want to see this trend go. Remember that lightning bolt trend in strength, L1 pullback, really shallow. Right? You don't want to see it go really deep. That causes some problems. So right now, we haven't had a really strong break above the highs. Could we say that the buyers have enough conviction to be an L1 buyer? I'm nervous. I wouldn't want to be personally. So to me, it makes more sense to look for an L2. Let the L1 buyers try, fail, and then buy the dip when they're all getting stopped out, when the rest of the world is trying to load back in on a deeper, better pullback. Crude oil. Man, it really big, strong move to the upside. Huge breakout move above 62, and then it just stopped dead in its tracks. Super balanced, really range bound, having a very hard time topping. I mean, obviously the high's at 63.55, but it seems like resistance begins in the 63.30s, and as far as support goes, support begins in the 62.75s. If it's below that, then we're in value. If it's above that, it's in value to be a seller. We're just kind of stuck. Obviously, it makes more sense to be a bull with the overall movement that's going on. And honestly, it still seems like with this big breakout move above the highs, they hit so many stops and a cascading stop run. I mean, that's a big squeeze. That seeing this backfill a bit would be very logical, right? So, I mean, a 1.5 DP move down, that would be incredible for a value buyer. The problem is if it goes all the way down there today, is it too much too soon? That could cause a little bit more. So I don't know. We'll kind of have to wait and see. Crude oil's a bit on the tipping ground here. I'm sorry, gold, a bit on the tipping ground. Crude oil, I mean, yeah, Zig, what's up, dude? Jeez, sounding the alarms back there. The euro is still building accumulation, and this is about as clean of a sign as sellers are going to get in terms of risk profile. And what I mean by that is we have a very obvious breakdown underneath volume, a very obvious wick test. there's no better spot for sellers who are looking for swing shorts to get in than this value shift. Meaning that they can short here with stops above the highs, or, you know, with a little bit of a buffer. You know how the markets operate. But the downside target is just the first objectives here, let alone actually getting back to the volume node. So, I mean, the reward versus risk is very, very wide, and that would compensate them. We have the value shift, we've got the volume shift, and if it starts breaking back above, there might even be some signs of an early exit. But for right now, I mean, swing shorts are definitely giving this a go, even though it is obviously a pretty nice bull trend to the upside. That volume shift is pretty telling that it might want to pull back a bit. If we extend this backward to the lower point, trying to hunt out an area of interest, now we can display accumulation volume, and a likely objective pullback would be filling in this VVP, which as a specific level would be 19,350. You do also have a pretty obvious one at 19,640 though. So those are the 2 points. Over on Bitcoin, I mean, fantastic flush off the lows. The only problem is it's like a head and shoulder fighting a head and shoulder. Got the left, right, now the, you know, I mean, all the way across. It's a really nice head and shoulders type formation. The only thing that I don't like about it, and the one thing that I don't like about these type of head and shoulders is general, is when the, wow, my English this morning, is when the neckline is sloping down on a short move, right? I don't like that, because now you're forcing a bear move to break lower, which requires an insane amount of strength, and it's not easy to sustain that kind of movement. So this is by no means my favorite type of setup as far as the head and shoulders go. I would rather honestly see this widen out to be a significantly wider one, because then we get things angled in the right direction. So, I mean, as it stands, maybe we go a little bit further up, maybe we fall a little bit lower down. We're just sideways. Out of everything in terms of value, we're definitely at the lows of the short-term value. If buyers are coming in down here, realistically, they're not going to want to see it fail back down through a new low. At least not by much. At least not, I mean, looking at the way that this looks, you can see the amount of support. Support, came down, big bounce, breakout. It held as resistance, turned lower, broke back above. Support, attempted to break down, attempted to hold his resistance, small little bear bar there, and now they're back up again. So you can see the concern where if this starts going a little bit further up, all those shorts potentially getting dumpstered. But all the falling resistance and all the crap is still in the way, so they've got some work to do. On Ethereum, nice continuation breakout to the highs. Kind of unfortunate in the way that this is setting up. We've got a 3-press top with a complete undertow across. If this does start pushing down more aggressively, which this is suggesting a deeper pullback is coming anyway, but when that deeper pullback does come, if it shows up too aggressively and the buyers can't get it to show back up, then we might be in territory of a Mac whack to the downside, and that causes further problems. And the fact that we're kind of overshooting the top of the wider channel would suggest that if it does pull back, it's going to want to overshoot the lows. I mean, that puts it down in the 2150s, 2200s. Makes it really hard to want to be a buyer up here, that's for sure. We've got the Asian session, which had an attempted move down. They tried deviating it down, but it made it about a half deviation and then rotated back up. After that rotation back up, it made it into the European session, but not before they had already made it almost 2 deviations up from the Asian session low. So a total reversal, big move up. Then moving into the European session, which is creating further momentum up, we are now a full deviation up above that. A lot of times they'll go 1.5 before they start finding some topping, and we've already seen 1, 2, maybe 3 in the really narrow, or 1, 2 looking for a third. And then we've got a 3-press top with divergence across the highs. Again, there's a lot of potential problems that this can cause if they don't start showing up soon. Now, from the perspective of cycling so far this morning, man, what a bunch of weird little swings we've got going on here. The only swing that we have to work with is this one that formed at 1:08 in the morning. Man, really awkward, but we've got continuation to the upside. They held 2-legged correction back to the L2. broke a quick high, and then into an L1. So they're climbing the ladder a little bit, L2 into L1, but this next breakout, this was no joke, right? This is sustainable breakout movement. So given that there is sustainable breakout movement, the next pullback is likely to continue this trend, L1, L2. We're trying to keep this thing going. Where are we finding immediate responsive support off of? L1. to the tick. Bounce. So we already know buyers are trying. They haven't made a new high yet, but this is kind of what you'd expect to see. Now, from a value perspective, if I want to get as good of a price as possible, then two-legged correction back down would put it right at the lows of L1. That would also be a phenomenal little trap underneath this little swing low. Ooh, man, there's a lot of things that line up just a bit further down. If we look at the bigger picture on the daily, we do have a pullback. Looking at the previous all-time highs. Make sure this has the right snap mode. Make that a size 10. Must have accidentally deleted it. There we go. Kind of hard to miss. So, again, looking at repetition in the way that the market has responded to these all-time highs in previous, right? We've got this attempted breakout above the highs, and if it closes above, the last time we saw that, right, we have a really one, nice, my English again, they closed on top of it, all right? If we go back a little bit more, they have an attempted breakout above, big bull engulfing candle. Well, that doesn't really qualify for what we saw over here, so we got to keep hunting. Strong breakout move. So if the next day is a bull bar, that usually procures a good week of bullishness, right? At least from what we've seen previously. But if we see a bull bar and it immediately fails back down, generally speaking, the next few days have some trouble. And we're probably going to be chopping around this all-time high previous for, well, historically, about 3 or 4 days. Which is kind of a bummer. But it gives us an idea of what to expect. If we go backward a little further still, this one was a wicked failure, so that one doesn't really work. If we go above this, we've got a bull bar. It continued up, and as expected, it went up kind of, sort of, for a good 3 or 4 days. The last breakout before that closed on top of it. We didn't have that this time around, so that doesn't really work. That was a wick, that was a wick. So just using repetition to our advantage and kind of seeing, you know, what is it that the market's doing. If it's holding bull bar after bull bar, you generally have a good 3 or 4 days, a week or so of bullishness. And if it fails, it usually gets stuck there for a week. I'm not expecting it to go anywhere. And the fact that we're hitting 14,000 right at a previous major swing on top of everything else, yikes, right? I mean, it's pretty obvious to build a reason as to why I wouldn't necessarily want to be a long way the heck up here. If we look at the daily, way down at the bottom, the first pullback really that they had wasn't even an L2. Jeez. They went up to another high. This is the next pullback. They made it into an L1. They're climbing the ladder. L2 into an L1. Bulls want to see this keep going. But that still means that the pullback's down at 12,850. So it's just a little bit of a ways away. Got some room. Over on the 60-minute, nice pullback off of the top. Big flush to the downside, and then a V-bottom right back up. Typically, when we see these types of moves, this is either going to keep on going, and we're just not going to see a pullback at all, or we see that higher low pullback back to settlement. It would be like an L4, and that would be the continuation. But that's probably not going to be the only one if that ends up being the case. If it pulls back, we'll probably see something like this first. So bulls who are in this want to see this thing just keep on chugging. Was that a to the tick double bottom on the low? What was the price of this low? 772.75. 772.75. A to the tick double bottom on the NASDAQ. Now I'm curious, did the micro NASDAQ go underneath that low? I haven't looked at it. What do you want to bet it did? I have the micro over here. Sure enough, 772.75. Okay. Wow. Good amount of support there. well, either way, we know what the buyers are going to be looking for. They want to see continuation to the upside. They want to see this thing keep on trucking. If we're looking for the downside, sellers have been slammed the whole way. I mean, we've got this initial move down, couldn't even make it back to L1, and when it finally did, just nothing. Nobody in L1, nobody in L2, nobody in L3. Everybody's getting railroaded who's trying to short this, which is no surprise. That's what the market typically does. But another thing that it typically does is if it doesn't break out through the highs, there's usually a few of those pullbacks really quickly before the breakout, right? So we've got this really sharp move to the upside. It wouldn't be a surprise to see a quick couple snapbacks before that big rally. It might be short-lived, but depending on where they go, that's going to be the zone of interest. Off of the lows, we've got a rotation L4, L1. Now they're trying to keep it going. 15-minute. We already know what the volume's doing there. Let's go in a little bit narrower now. Got those two legs to the downside. What kind of volume was that? All right, there's our battleground. If it does pull back, guess where I want it to pull back to? 900. And I want that to be the support zone. Preferably, or at least around there. It could get buried down into like the 13,880s or so, but that's going to be the zone. If we extend this a little bit further forward, let's see if they shifted the POC. They did not. It's still there. Wow. All right. 13,900. NASDAQ pulling back a little bit further. We've got about 6.5 minutes or so, 7 minutes until the open. It's right around the corner. Looking at some of the crypto markets, since those are obviously jumping around as well. We've got Bitcoin and Ethereum, which we already talked about, but EOS is another one that is looking incredibly strong. Nice pent-up energy going on here on the EOS block. And, I mean, we're talking EOS at 760 already. Just like last week, it was at 4. Yeah. I mean, these moves are insane. Litecoin now pushing near 300, and again, it's okay, but Litecoin feels like it could use, man, a 3-press wedge flush down to like the 250s would be really nice. Over on Bcash, I would like a trap on the lows, honestly. Quick little dip down to 750. Over on Link, finally. Good Lord, it took this thing long enough, but it's finally churning to the upside now up into the 42s, 43s. Good continuation higher. Lumens, I think Lumens and Tezos, which Tezos is already kind of kicked off, but Lumens I think is the next big one that's going to be looking for the big breakout squeeze. As long as we continue to see strength on Ripple and Tezos and all of these little micro markets, the sub-dollar markets, Lumens, it's just kind of by proxy at this point, which is unfortunate because analysis now on the market is just kind of FOMO analysis. But upside objectives would be a break back into the 70 cents, but you never know when these things squeeze. This thing could go all the way above $1. Lumens looks really strong, and this consolidation here looks nuts. Now, one thing that I do want to check whenever we've got a situation like that where it's like, okay, Lumens, you know, maybe that's something that I want to keep on my list. You know, maybe this is something I want to pay attention to. That's where I want to first off see who is trading the largest amount of volume, right? Where is the volume analysis going to be the most beneficial? So you can do that by going over to CoinMarketCap and coinmarketcap.com, and then look for Lumens in the list. You can also use the search function, but it should be pretty high up here. Yeah, there it is. So what I want to do is I want to click on XLM, and I want to go into the market, and I want to see who's transacting the most volume. Where is where's the money, right? So if we look at the volume on Binance, XLM USDT is almost twice as much as Coinbase Pro. So if I want to do any volume studies, I'm going to want to do it on Binance because that's where the cash flow is. There's no harm in double checking some of the other ones, but it's going to make a lot more sense to look at Binance. So if I'm looking at that, let me see XLM USDT on crypto. Be over there. So here we've got lumens on USDT, and this is on Binance, right? You can see the feed up here. So this is where I want to do my volume analysis. This is where I want to see where are things actually going. Very obvious low down there. We'll just go to the high. Jeez, oh Pete. So it's pretty obvious they shifted the volume there, and we are now building another relatively large volume node. It's pretty close to contesting a POC shift. So if we get a POC shift and volume begins trading above that, you can see it's another breakaway move. We have already had 3 drives to the upside. So this breakout back to the highs might be short-lived. I've been saying that about crypto for a while because I feel like it needs a pullback. It's desperate for a pullback, but it just keeps not pulling back either. So, oh well, I guess we'll just keep letting it go. Lumens look, I mean, that looks really, really nice. Narrowing into like a 15-minute chart. Since we've still got a little bit of time and the markets aren't doing anything. Looking from the top down. Oh, that looks so nice. Whoo, lordy. So we've got a total volume shift. And the POC is underneath price now. And price just broke above it. So if they start breaking this falling resistance, it's like game over for the shorts. They don't have anything left. There's nothing left to hold them until we get up into the 64-ish zone, 65. And if that breaks, then there's just nothing all the way up until like 68.5. And that's just in the short term. If we bring this back a notch, let's go over to the lows. We know they built up the volume at the bottom, but I'm curious as to where they built that volume up. I just want from the bottom to the top. Okay, so this is another very big point of interest. If the market on lumens is going to continue higher, a likely objective for it's going to be 66. That's where they were built in before. So this is going to be a big zone that we're going to have to keep an eye on the lumens market. If it's going to continue back up, it's first off going to have to get back up to 66, obviously, but it's going to need to get above it. And this is going to be the hard point of interest at 66 cents. There's still some room. If we get a nice little wedge breakout, that's a pretty decent, say it was like here. It's like a 3.74% move. Assuming no leverage. I mean, that's not too bad. Anyway. Here we sit. Fingers crossed something moves. One minute until the open. From the swing long perspective, obviously timing's a bit unfortunate, but longs are going to be looking at the bottom of this L1. Their stop sizing, and this is where it becomes unfortunate because of the time of day. It's very likely to slide through likely stop points, but initially, if it were any other time of day, stops would be inside the L2s or potentially even down the L3s, because if it makes it down there, then realistically they're wrong. So you can see kind of the probability spread that we've got going on here. Buyers who are buying up here, but their stops are down here, their targets are likely going to be inside the highs. They're high probability traders. They're risking more than they're willing to make, but their trade-off is the probability of success. So that is kind of the way that you can buffer the open. It's a very uncomfortable situation to put yourself in. $9:30 hits. The stock exchange is open. NASDAQ will be looking for that quick little flush dip back down to the 13,913s. Oh man, another really strong L1 bounce. So buyers are going to want to see this follow through. If they're buying up here, they want it to jump just basically straight to the top. It jumped initially, I guess. More bullishness to the upside. S&P has this phenomenal inside bull bar going into the open. Again, timing is incredibly awkward, but Market continuing to the upside, holding the L1. So we have another L1 continuation. We're looking at the overall sequencing. We had the L2 pullback that lifted up into an L1, that lifted up into another L1. We're likely to continue seeing L1s, L2s. Eventually, there'll be a deeper pullback, but now we've got two L1s back to back. The next one's very likely going to be another L1. Buyers have already demonstrated their strength, but it still would make more sense to see a trap underneath the lows, so the lower side of it might fit a bit better. And L2's right at the top of the Euro session. It's hard to not want the deeper pullback. I hate being at all-time highs sometimes. Or around them. Like, man. Bulls with continued aggression to the upside. If we look at the volume from the beginning of the day, we can see that they are attempting to build an accumulation volume, and they built the POC at 935 and price traded above it. So we're starting to kind of squeeze onto those sellers a little bit. Looks like the majority of the seller stops would have been inside here, just given the volume. Yeah, I got out of the long last night going in right ahead of the close, and I just didn't want to deal with it. I had a bunch of other things that I needed to take care of, and so I exited, and of course, every time I exit, you think I'd learn. More continuation. So far, the sentiment's going to be on the L1, so these other levels I don't really care about yet. Oh, man, the S&P. Yikes. Did they put a... Now, the big question is, that big rejection on the top, did they put a big volume node in there? Oh, no. Oh, they sure did. 41, 45, 50 so far. All right. Well, what about the NASDAQ? Is there an obvious winner? Yeah. 45 quarter. There's still 10 seconds. A lot can happen in 10 seconds. Buyers will be looking for the market to back up a little bit back towards that volume cluster, especially given the L1 continuation and everything else that's going on. That is the confirmed node. S&P closed underneath it. Yikes. That's a bit troublesome. NASDAQ beginning to fill in some of this voided out volume that they left behind in that big dive. Lumens is starting to perk up a little bit here. They're poking their head above that falling resistance. I cannot believe that Ripple almost made it to 2. Like, what? I talk about, they created the perfect scenario. I mean, I suppose I can't believe it in the way that they did it. They basically made the market entirely illiquid and almost impossible for anyone in the US to get a hold of it without having to go through a bunch of hoops, and then ramped it up. Incredible demand and zero supply. Well, The thing that bothers me about Ripple, I've never been a fan of Ripple. I hate that thing with a passion, but I'm with Elon. I want to see Doge win. The meme coin for the win. I mean, good Lord, yesterday and by itself was enough on Dogecoin to single-handedly print millionaires. That thing went up insane. I think the market fell back asleep. What happened? Watching the NASDAQ, if we can get a little bit of a volume dip back again. Still waiting for the L1 or anything at this point. Crude oil getting chunked back down just a little bit here. Gold breaking above the top of the wedge with more conviction. Good breakout move. If we're looking at the overall momentum on this breakout, which, by the way, Bitcoin and Ethereum both showing really good continuation as well. Looking at the S&P or the NASDAQ or any of these other ones, the S&P out of all of them seems like it's in the most trouble. So if I wanted to be a long, the S&P is going to be a tougher sell for me, or I guess a tougher buy in this case. There's a little too much, and now volume is stacking up on the top. I'm going to need to see it break above the highs and keep going and kind of go nuts. With the NASDAQ, it's a little bit easier because there's still a lot of room, and we've already shown volume support that has shifted off of 785. So there's plenty of proof. It's I would rather be along on the NASDAQ, right? We're breaking above those zones of resistance. There's just less work that it has to do. On the crude oil side of things, again, buyers are going to want to try to prop the market up as high as they can as a zone of interest from the perspective of probability, at least. We just went above the highs and totally failed. So if the market's going to rotate back down, I'd like to see a one deviation move lower. And if we look left on that one deviation spike, there's also a giant pump in volume right ahead of it. So 61.99, that would be the swing long zone. That's kind of the area of interest. That would be a relatively large pullback, but now from a risk perspective, obviously I really wouldn't want to see it get much further than, I mean, it depends on how much risk you want to take on, but realistically, that zone of interest, you wouldn't want to see them breaking down underneath 61.56-ish. And as far as targets to the upside goes, that allows a 2-to-1 back to the cluster at the bottom, which is perfect. So that would be the crude zone of interest. Nothing else really lining up. Crude's the only one. Bitcoin would be phenomenal underneath 62. A quick little dip underneath 62K. Whew. Is the Dow moving around? I've been seeing a couple headlines with the Dow a little bit more. Maybe it's starting to step up to the plate a bit. The Dow's volume is completely abysmal. So they haven't even broken 50K today. Volume shifting up, 13,960, POC on the highs, and price maintaining pressure above that area. We now have a really big problem if the market starts turning down, at least. Now we've got a 3-press top, a very obvious 3-press top, and along with that, a very obvious undertow that could potentially create a Mac whack. Mac whacks are no joke. I know the name is kind of stupid, but that's just because I couldn't resist it. Those types of moves, I mean, they can really grind some huge monster runs. So the NASDAQ, man, they've got to hold up here. If we can get a break back above and start really churning to the upside and, again, get the squeeze going, then okay. S&P still stuck around the first 5. NASDAQ hasn't pulled back to test it yet. What does dirt mean on your chart labels? Haven't been here for the longest time. Yeah, so dirt is just, it's working our way down. So at the top, we start with an O zone, which is like obviously way up in the stratosphere. You're in the O zone, you're looking down. There's no fine details. It's just, hey, there's a mountain. Hey, there's a desert, right? It's really, really wide out there, big zones of interest. Then you go in a little bit closer to the cliff. Now you can see a bit of the finer details. You can see some forests, you can see some trees, but there's not, I mean, it's not super fine detail yet, right? If you want those details, then you go down to the hill. And when you're on the hill, now you can see all the trees. You might not be able to tell where the forest starts and ends, but you're in the trees, you know? If you want to get really close, then you stick your eyeball in the dirt and you see what the ants are up to. It's just a progression on the way down. Could you elaborate on what a MacWhack is? Yeah, I posted a video on YouTube maybe about a month ago now. It was about the MacWhack setup, or the WhackD, or whatever you want to call it. I'd have to pull it up real quick, but it's a type of setup where you're looking for a perpetual undertow, in a sense, where there's just, like in this, the market continues to go higher and higher and higher and higher and higher. But the MACD is saying, whoa, wait a minute. This is why I call it an undertow. Because on the surface, it looks all hunky-dory. Everything looks great, right? Looks awesome. But as soon as you stick your foot in the water, it sucks you out into the ocean and then you're dead, right? So that's why I call it an undertow. Because if this loses its footing, all of a sudden we go from 13,960 all the way down to the Euro session lows, and we're down at 13,800. We've seen it happen over and over again. So when you have this type of situation, what it creates is the mentality that the next pullback that does happen is likely going to be a lot deeper. I don't want to be an L1 buyer anymore. I want to be an L2 buyer. I want to be a little bit further down. The L1s, they're overextended. It's kind of jobs done. And we're seeing that on the volume, by the way, as well. Building volume, accumulation, etc. So what I would be looking for then is a continuation down, the market to drop, and to see the MACD obviously follow along with that. And what happens is the MACD will do its thing, but eventually will come back and treat this like it was a trend line. And that's where the Mac whacks it. And then it goes blam! And the market just bottoms out and goes nuts. They don't happen very often. But when they do, they're incredible. Of course, context. But I couldn't resist the name, you know? I mean, come on. A WhackD. Like... there was one on... right there on gold. That's a MacWhack. We have a persistent undertow. Constantly. Over and over and over and over and over again. Now, remember, context is everything. What's the context? Buyers haven't had a chance to buy into this thing in forever. They're waiting for a pullback. A two-legged pullback. How much better can you get? You know? So you get the two-legged pullback. The whole time they're down there, it's telling you to be careful. And once it finally comes back and whacks it, that's the bottom. That's why I like them. Unfortunately, context and the fact that they just don't set up that often makes it fewer and farther between. But, you know, hey, I can hope. Ooh, S&P. That rejection off that volume node, that's a big problem. The name is outstanding. Yeah, I know. Just couldn't help it. It's too good. Crude oil, I'm still waiting. That's the only one that really is showing any sign of potential swing interest outside of crypto, of course. Crude oil back down in like the 62s, 61.99s. The euro is... man, the euro is in a really messy spot here. It's almost painful. Like, what do you do with this? Would you look at this? Would you look at that? I mean, this is the only thing that stands out, right? We've got this potential of a descending wedge. It's super early. What I would much prefer to see for the euro would be a breakout and then that low retest back down into the 19,640s. That's the swing that I want to see. So far, we haven't even broken the fallen resistance. So we've got a ways to go. That would be probably the next one to be setting up, though, outside of crude. At least so far. I can't do anything on the S&P. 45.50 is a mess. But we know that 45.50 is a mess. Buyers continue to buy back up into that zone. So looking for a bear bar and a big bear trigger, I have to assume that sellers on a giant bear engulfing candle will have been able to go down, but their entry, smart traders at least, or the early entry traders, would have been at 43.25, which means their targets are at 42.25. That is the exact entry point of shorts on this bear bar. That's great if you're looking to get a target out, and that's also great to set up a potential trap. So I really like that spot for a trap bounce back up. With the assumption that these sellers, they're taking a super late entry in a move going against the overall trend. It doesn't make any sense. I don't know if I'm gonna get filled, but if there's a lot of stop orders underneath this bear bar, it'll make it a lot easier. Stop orders for entries, buyers with stops underneath it, etc. So, hopefully. But I can't go further up because I might get filled to the tick and we might not actually get the trigger. And then the whole purpose of the trade's invalid. So it has to be at 42.25 or lower. The perpetual motion machine on the NASDAQ keeps going down. Undertow hanging out, telling us that the next pullback is probably going to be deeper. I think the long here on the S&P, I just don't see a reason for it to be a swing trade down here. I just don't see a swing here. It's too far up, right? I think scalpers are the only ones that can really play ball right now in the S&P. Swing traders, etc., they're sitting on hands. They're already in. They're just kind of waiting. You know, there's not really much to do right now for them. NASDAQ, come on, give me a quick little flush down to that 45.25. I know you want that volume node. A little bit of a dip underneath it, 940s. There's a big VVP resting underneath there. I bet they would love to fill that volume in. The S&P, man, they couldn't get that one tick underneath it. And now we can see the problem. There's only a minute left. So I honestly, that's not necessarily a bad thing. Because if we have a bear bar that's relatively weak, or it went all the way down, but right at the end of the candle, that's more fuel to the potential trap fire. And the original signal bar that they're trying to sell underneath this bear bar didn't trigger. A lot of times secondary triggers, and they end up being traps anyway. So it's actually kind of okay that it's running out of time. That might create an unnecessary amount of pressure on the sellers where there doesn't need to be any pressure. And it kind of fakes them out. Turn my heater back on. It was nice here for a day or two. Oof, candle gap back to the upside on the S&P. They closed the bar at 43.75, opened the next at 44. So buyers hitting buy market right at the close of that bull bar. So much so that it couldn't even plot a price there. It jumped before it could. So sometimes when they backfill these become zones of interest. And the fact that they couldn't fill those shorts on the bottom, 43.75 makes some sense. 42.75, I still like it if it dips down there. That's fine. But I like this area to backfill this little gap they left behind. So far, the market has not been leaving behind gaps. And if it does, it fills them in. So I've got a pretty obvious reason to be interested for the upside if the bulls are showing some strength here. They keep shifting the POC, but they're not getting the job done on the NASDAQ. breaking back above. Gold seeing a very nice lift to the upside. Some strong candle gapping, but has already achieved objectives. Ethereum back at settlement from midnight. S&P testing 43.75. There we go. 44.75 will be the first objective. And the nice thing is it's back inside of 45.50 as a zone of resistance anyway, so it helps there. But again, it's only scalpers here. I do not see a reason for swing traders to be doing anything on the S&P. Tested the second one, but I didn't get that fill. Now rotating back up. Well, what is that about? That's not nice. Okay. All right, fair enough. Well, so when I'm scalping on the S&P, I'm approaching it from a wider risk perspective regardless, obviously. But the mentality of a scalper is going to be, I'm okay risking a little bit more with the assumption that I have to risk a bit more to gain what? To gain probability, right? That's how it works. You trade one for the other. As an example, simplify things, right? If I have an entry here, and I have a target here, and I have a stop here, the probability of success on that trade is incredibly high, right? Just to obviously over-visualize it, but that's what I mean by that. So the same concept is true here, where we've got this bullishness to the upside. I'm willing to be a buyer on this pullback with the assumption that, at least previously, bulls have had enough to churn the market back up again. But if it goes a little bit lower, I'm buying further down. Now, why would I do that? I'm doing that to increase, again, my probability. I'm not stopping out of the trade. I'm adding to my risk, which effectively draws my average down a little bit further. If I'm still a scalper, I'm looking to get 1 point, right? Well, 1 point is even easier now. It has to go up even less. And the same thing would be true if it goes down here. I'm still looking for 1 point. It has to go up even less because I'm slowly drawing my average down. But eventually you will run into those situations where it just doesn't stop, right? It's in rip your face off mode. And if that happens, then you've got to have kind of a break point. And for me, a break point on this would be if it starts dipping underneath, I mean, this was the bull bar that kicked it all off. So if they start diving underneath that, there's obviously a problem. We'll very likely see signs to exit way before that happens. But just in case the market were to plummet or some tweet or something came out, that would be the zone where I know I've got to start pumping the brakes a little bit. I said I have to S&P, not you. You're slow enough. You keep going. Weak bear bar. Another gap from close to open on this candle. NASDAQ's getting a little bit stuck. There's not really much happening, honestly, at all. $42.75 testing again. Apparently, I am not the only one in line here. Jeez. Maybe for trading, there are abundance of correlation. Is there any similarities in today's markets in the 1920s? Objective now at 43.75. Effectively, still a point. just with a little bit of extra commission cost, unfortunately. All right. Scalps out. Let's see. There are I like that. There are pundits of correlation. Is there any similarities in today's market in the 1920s, like 100 years ago, caused the stock market crash? So when we're looking at similarities, I mean, one thing that you have to keep in mind is that humans are creatures of habit, whether we like to admit it or not. Right? Look back at what your kids, if you have kids, look at the style and stuff that's beginning to kind of like come back. It's the stuff that when I was a kid, right? Like Jinkos started coming back. Like, what? I thought that would never happen. But, just like the 70s rotating back around when they started having kids. It's the same thing, right? And so we're creatures of habit. And this is no different. We look back at history. I do all the time. I call it repetition. But I'm looking back at what has happened historically to gauge, is that what's happening now? Are there similarities? And if there are similarities, what should I expect from these similarities? And does it do that? And if it doesn't, then I know to stop expecting those similarities, right? That gives me information in and of itself. Are there correlations? Yeah, definitely. Because any market that has a correlation is going to get pounded by algos. So if there is any correlation that doesn't already have a market surrounding it, there will be probably by the end of today. Correlated markets don't stick around very long, that aren't traded at least. So we look at history all the time. Same thing with the January effect. If January closes bullish, generally speaking, the year closes bullish more often than not, at least based on history. So far, it's looking pretty good. Price is back underneath volume at 13,960. We still have not tested 945 quarter volume. Whoops. No pullback on crude. S&P's not doing anything. We're not even close to a zone of interest on the S&P. From a swing trader's perspective, again, looking for those multi-tiered pullbacks and the fact that we've got undertow and everything else going on here. Longs on an L2, looking for a zone of support to come in the L2s. That's the big zone of interest right now for buyers, if they can get the deeper pullback. Oh, that volume shift. Whoa. 13,960 sporting a big rejection right there. That could be what it takes. Let's see if they can follow this through or if it fails. $10 top of the hour. We've already seen the volume shift. We've already seen the market respond to that volume shift. $9.45 quarters a zone of interest, although I would like to see it get underneath that to like the 25s. Scalpers in the short term will be looking for a 3-press wedge low to come into play. Hasn't quite made it there yet. Needs a little bit of a blow off. Still, again, down to like those 35s. Come on, NASDAQ, just a little bit. They're getting there. They're right at the 5-minute volume. 5-minute volume's holding it. Ooh, okay. There we go. Can we get a little bit of a push? Come on. I didn't get a fill? All right, let me see if I can get another push down then. I tried buying the bid, but I didn't get it. One more push, NASDAQ. Come on. There we go. Buyers finally getting the physical test area of interest. Scalpers will be looking for an initial bounce back up towards those 45 quarters. But realistically, this is the early zone of interest. Attempting to flush back out, I'm going to reduce my risk while the stop is small in favor of the ability to have some flexibility if it dips down to that L2. I don't want to get rid of the long. I like the long, but I'm not willing to hold on to risk. It didn't respond the way that I wanted it to. If it does go back up, 960 is the objective. Bulls churning down through a new low. I've already mitigated risk, so I'm looking for a deeper pullback a bit further down. I don't want to get rid of the long for obvious reasons. This is a phenomenal pullback zone for longs to accumulate into. Starting to feel like I'm not going to get that pullback on crude. Man. Maybe Nat Gas News will throw it around. Who knows? If the market does just go screaming up from here, 2-to-1 on the actual risk puts an objective at 56.75, which is still ahead of that volume at 960. I'm okay with that. .45 quarter volume testing again, this time from the underside. See if the bulls can muster up a little bit more here. Upside objective 2-to-1 actual at 56.75, but I mean realistically up into the moving average cluster 60s, 62s even. Tested 977.75. You can see this big dashed green line here. Running into some problems, obviously. Oops. Nice jump back to the upside. $41.75 is the break-even point, but the wedge low is still a little bit underneath that, so they might kind of mess around with the break-evens a bit. Back to break even again. Inside retest of the wedge lows. I'll look to add another one in this zone. I don't mind this area as a secondary reattempt, but I want to see them hold a little bit further up. This does modify the actual risk target quite a bit. Two to one actual risk. First objective is now down at 49. 3 to 1 would be 54. But, I mean, honestly, if this thing is going to go cruising to the upside, I would rather look for a bigger objective back up towards that volume node. NASDAQ not seeing the follow through. I'll reduce again. That brings my average very low. Again, all I'm doing is I want to stay net long, but I want to maintain the best averages possible for the rotation back to the upside. And every time my original entry point fails, I don't want to give up like 30, 40, 50, 70 ticks at a time. I'd rather just give up 5 or 10 and then look for the rotation back up and try to bag 80 on the way higher. They might have a nice little break-even jiggle in this zone. But I want to see them respond. See if we can get back up into the 60s. Yeah, and that's the problem. If it starts breaking down again and it's not going to start holding this support, then that's the fear, is that a lot of these buyers are going to give up, causing that larger flush down into the L2. So that's why I'm a little bit jittery and I'm not willing to hold on when it starts getting -5, -6, -7. Okay. I will with 1, but not with 2. Like, I'm always trying to keep my risk a little bit lighter in this area because, I mean, we're talking the NASDAQ, first of all. But second of all, if it does break the low, I mean, who knows? It might flush down to 910 and then right back up in a blink of an eye. That happens too. So far on the trade, as far as percentage, 0.5 is all the risk that it's had to go. So a 2 to 1 actual risk would be back up into the 49 halves. I've only got the 1, and I think it should be able to achieve a wider target than that. But from the top down, looking at the volume, as far as like points of concern, if you will, there aren't necessarily many until we start getting up into like the 6950s, or if they shift volume ahead of that. We are through the ish. All right, stop loss. Oh, geez, okay. Well, I moved my stop up for a second. I was going to say I'm locking in the 2 to 1 in hopes that this is still going to continue to drive further up. And as soon as I clicked, there's nope. Okay, fine. Jeez. So again, the reason why I like that area, I only have the 1, but we've got a 2 to 1 actual. I gave up 0.05. I gave up 0.05. This is a gain of 0.1. It's a 2 to 1 on the actual risk. It's just kind of the way that it worked out. It was a bit vindictive because it's probably going to keep going. Oh, well. 960 is the big volume node. Gold is just screaming higher. A little bit past 10. There's not a whole lot going on anymore. We now have a break above a new high with bulls trying to get conviction back to the upside. They still have not gotten that L2 pullback. Quick little snap back. This area in the 50s, this is the portion that we broke out of. I'm kind of curious to see when they retest volume back on the other side, 45 quarter, if they respond to support again. Scalpers will be looking for a bounce off of that area. See if they can get a quick little flush down into the 45s for scalpers to try to reattain longs. Oof. That might be all they've got. Well, maybe. We've got a halfway decent string of bear bars to the downside now. Maybe better to wait for a second leg. Question about the levels, L1, L2, etc. using fibs? No, I use different ratios and percentages outside of fibs. Fibs are useful in and of themselves. Obviously, it's another one of those self-fulfilling prophecy type things. But no, I don't use fib levels. I use fibs for my moving averages sometimes. Like I'll use a 21 as an EMA. I do love fib. I have a Fibonacci spiral tattooed on my forearm. Like I love a good fib number, but 45 quarter to the tick, huh? I was hoping to get just a little bit underneath the 45 quarter to get that quick little stop push. Obviously, they got the stop push, but without me. Wow. S&P back up to 45 quarter. Or 45 half, rather. They broke above the volume at 960 as well. The next zone's 6950. That's the POC of the entire top. Oh, man. As soon as it even sniffed the same air, that thing backed off. 6950. Yikes. See if they can pop above it. Very nice bull bar on the S&P back above. See if they can backfill this 46. Again, gapping from close to open. They very typically fill these in. 46, 45, 44 for the scalpers. All right, back above the volume at 6950. Entry 941, exit 970. Nice job. Phenomenal continuation up. Jeez. All right, so we are in the territory where if this is going to be a Mac whack, if this starts turning down, that could be a bit of a concern. But here's the thing, it made a new high. That kind of invalidates this, and it's already gone quite a bit above it. So that's off the table. This is actually giving us a clue that the bull trend is back on. The menu is it's back on. The bar is open again, and it's happy hour. So the fact that it's breaking to the upside, this might be either the final leg and it completely reverses and dumps all the way back down to settlement, or this is the big clue that it's back on again. Now what we need to see is how do they respond to the breakout point? They failed underneath the lows. When they come back, do they treat it as support? That would be more along the lines of the MACWAC now. But that favors the bulls. We are going on 10:20 as well, going a little bit later into the morning session. Things are slowing down a little bit, so feel free to get those questions in. We'll get those covered for you. On the S&P, still has 3 minutes left. Plenty of time. My POC still rests at 960. It depends on where you started the drawing point from. I have a POC at 960 as well, but that's from the bottom. The short-term POC is just measuring from the top to the bottom, which is now invalid that it's made a new high. But that was the POC before it broke above the highs. So the shorts that were trying to carry this through, that's where they were at, but they got wailed on. So they're out of the way now. We do have the, I did finally figure out what I was going to talk about on this next, it took me a minute, on this next upcoming VIP stream. So the next VIP stream is coming up on the 24th. If you go in the VIP, actually, let me make sure it doesn't show anything. If we go into the VIP zone at the top, you'll always see when the next VIP webinar is. Apparently I'm not even logged in. Hang on a second. Jeez, oh Pete. It's not like I own it or anything, but... Go back to the VIP. There we go. Well, whatever. The password's not going to mean anything if you don't even know what the link is. But so this is actually kind of two birds with one stone now that with that second question there, Captain G. But this is where you also have the non-delayed Zoom stream. You can find those inside there. But if you're looking at what the next VIP webinar is about, it's going to be on the 24th on the weekend. It's going to be utilizing order flow to gauge major turning points. A really interesting one. So that'll be a fun one. And if you're looking for where is the non-delayed stream, if you go to the VIP zone at the top, assuming you're a VIP member, then you can just join the webinar there. Oh, S&P. Hi. Didn't realize you showed up to the party. Hang on, let me pay attention for a second. 46 back up to 47. How much is the mentor package? The Day Trading Academy is $299. That's down here. And one of the big things, if you go in, when you click Learn More and gain access, there's a full video that goes over everything that is about it. But effectively, if it's something that you really enjoy and you do want to upgrade to a VIP status for all of the extra perks and everything else, the full cost of the DTA gets taken off of the VIP as a discount. So it's effectively, in a sense, free when you're upgrading in that mindset. I don't like charging a ridiculous amount for stuff if I don't have to. I think the value's more in what we do. And I don't, especially now with the world falling apart. It's just, I don't know. Target filled on the S&P. Yeah, I'm not about to open that can of worms. There's some things I don't talk about on stream or in the webinar. Politics, that's one of them. Unless you want to make enemies. Half the time you could have the same viewpoint and you can still make enemies. It's funny how that works. Hot button topics, just not worth it. So target taken out on the S&P. Cancel the remainder. And then don't forget too, out on the YouTube side of things, underneath the stream, there's also the join button. And then from there you can join as a YouTube member. You won't have access to all the VIP stuff, obviously, but you will have access to like the Discord chat and stuff like that. So there's alternatives and options for sure. But the meat and potatoes, you know where that's at. Not really much else going on. I was looking at that crude oil swing, but I gotta say, I'm probably not going to get that pullback anymore. That's a bummer. All right. Well, I'm going to cancel the long on crude. That's just not going to happen. Look at gold. Wow. Well, I mean, obviously the MACWAC is working. We've got a new high. It's breaking above the highs. Massive continuation to the upside, breaking above the wedge top. This is starting to reach out to the top of the channel. Yeah, we're over it. So it's over the top of the channel. This is a very decisive break. So if buyers are buying this low and they're picking this up, this is an L4 break, which has an incredibly strong rotation to the upside. The next very common setup is an L1, right? Out of the pattern book, if you will. That's what you would expect. After an L4 rotates back up, aggressive buyers coming in an L1, we have proof. We've got the MACWAC way earlier. I mean, there was reasons for buyers a lot sooner. But if they're late to the party, then 1758. You're not looking for a long-term hold on this, right? I mean, this is more along the lines of those lightning bolt type moves. Just short. The swings are already in and very likely in some heavy profit territory right now. Unbelievable move up. Euro getting clubbed. That's one heck of a bear bar to the downside. And they're gearing up. Man, MACWAC's all over the place. It sounds like that F.Lux duck. MACWAC. They got to break lower, though. S&P is up at the top of the channel, finally physically testing the top of the channel. So from that perspective, we are at a major objective. A lot of buyers will be taking profit up here. .45 quarter, fairly obvious zone of resistance now coming into this previous, especially in the 15-minute. Looking at this zone. I mean, that's almost perfect. ABCD move up. I mean, is that perfect? Wow. All right. So, I mean, if we start demonstrating some trouble here, we know why. We've got a measured move completion, and it's right at the back, kind of the back 40 of that big volume node from before. So they're kind of backfilling some of this VVP. This is where they were taking profit on that initial rally into the highs that caused the dump. So first zone of resistance is going to be kind of on the shelf of that volume. The next zone would be at the VVP just above that, right above 14K. What a wild move. Coin IPO not moving. Coin, I mean, I gotta say, which, to be fair, we did kind of expect, right? Kind of lackluster on that IPO, huh? Not super impressive. Hey, how's it going, Vicky? Welcome, welcome. That coin IPO was just hot garbage, which, like I said, I mean, I think we all kind of anticipated. Way overvalued, way overpriced. I get it. You know, haha, funny, they rotated off 420, and it's 420, what is it, this week, right? Or next week, Tuesday. All right, so if I'm a little more out of it on Tuesday, you know why. I'm just kidding. You know, but you'll see these kind of haha funny jokes all the time in markets, especially when it comes to crypto. You'll see crap like rotating off of 420 or a lot of volume sitting on 666 because it's just one of those things. Like, it is a meme market in a sense, and it's kind of at the roots of what it is as a whole, which is why I still think I'm with Elon. I would rather see Doge win, and all of a sudden Doge is $100,000 a coin. Could you imagine? But when we're looking at something like this, I mean, they're bringing regulation to the US. Nobody in crypto really likes it, but like we talked about yesterday, it's one of those necessary evils. I don't like it, but if it's going to have an adoption to, you know, the rest of the world, especially in the US with all the red tape that's floating around, it's a necessary evil. It has to happen. Do I think it was massively overvalued? Yeah, we said that yesterday. It was incredibly overvalued. Wait for the lift and then let it dump, because that's what it's probably going to do. Some of the best things, I mean, I don't know if it's going to actually do it, but the IPO open price around 380, chop it in half and try to get a 50% discount, you know? My crypto's knocking it out of the park. And that's the thing. Like, why buy Coinbase IPO when crypto, like Dogecoin's going up 4 million%? You know, like who cares about the Coinbase IPO? Woohoo! It went up 5%. Yay! Like, nobody cares. It's great. It's cool. You know, it's cool. It's good. It's necessary. It has to happen. I get it. But I would rather just trade crypto. Who cares about the coin? I don't know. I think it was just overhyped. What a shock. I don't think the hype train is done, but it needed a pullback. I think that would be the safest way to do it, Bill. Honestly, just let it find a balance. Right? Let it find a base. Let it figure out what it wants to do first. Let everybody else put their money in the risk side of things. Come in after they've all blown up. Right? Once the decision's been made, it's easier. XLM. Oh man, XLM is looking nice. I've got my peepers all over XLM. XLM, SAND, SAND, that's another one. SAND USDT. I mean, Neo's already, man, Neo's gone insane. Link is finally doing what it should have done a half a friggin' year ago. EOS looks like it's still a bit early. Might have some nice breakout movement. Speaking of, Doge also looks like it's a bit early. So there's some still potential moves to the upside. You just don't see how long they're gonna last, you know. So anyway, we are in training time. Feel free to get in those questions. We'll get those covered for you. Best IPO is PLTR though, under 9. Wow, nice. So I mean, hey, you know, so sometimes those IPOs, or if you can get it even beforehand, you know, over the counter OTC stuff before they've actually gone like fully those. I mean, yeah, when you can find the one that works, the one out of 10 that actually nails it, those can be insane. That's a really good play. It's almost hard to let go of those ones, you know, when you get in at such a good price. Like, I kind of don't want to sell it. It's like a relic now. Like, just take a screenshot, print it off, and post it on the wall. Advice into averaging into trades, NASDAQ 3 contracts or so. So first off, the very first advice that I would say to anybody considering averaging in who isn't necessarily familiar with it, don't. I know that's not the answer that a lot of people want. Everybody wants the warm, fuzzy answer. You're not going to get that from me. The building into trades is phenomenal when you have an understanding of what's going on. If you're at that point, then, by all means, it's your money. You do you, whatever. I can't tell you what to do. But just understand that there has to be a good understanding of what's going on in the market to be able to build in reliably without the risk of annihilating your account. Okay. And that's the downside, right? It's super easy to build in, and it's super easy to get overly confident because you're always right. Right? I mean, you buy and you hold and it goes down a little further. You buy again, you hold, you're playing the averages, you're playing the odds. And generally when the odds are 80+%, you're going to be right more often than not. But if you're still kind of newer to that, or you don't have the, and I don't mean this in a bad way, the intestinal fortitude to axe a trade when it's bad. I mean that in all of the right ways. I hope you understand that. To axe a trade, to know when you're wrong and to cut it, you're going to blow your account out building into trades. So with that soapbox out of the way, okay, I generally, when I'm looking at building in the trades, I like keeping everything in a risk percentage basis, because risk percentage basis means that you're staying active on any account size. You could be building in on Bitcoin on $100 account. It's flexible. So I like having a certain amount that I like allocating to trades. Yesterday we were talking about that a little bit. I like having a max risk of generally around 0.005 or half of 1%. Now, depending on your account size, that might not be feasible, or you might be totally fine risking 5. You might be fine risking 2. You know, everybody's different. But knowing what your overall risk percentage is, and then looking at saying, okay, I know I want to get in here, but I don't want to get in with my, like I was doing here, actually. This is a perfect example. I want to get in long here. I love the bounce here, but I'm not willing to hold it if I'm not right straight away, because that's what I want to see here. I want to see this thing lightning bolt out of there. That's what I was looking for. I didn't do that. So I exit with a small loss. Came back down, found another bounce point, but it got a little jerky down there, kind of chopped through it. Not good enough. I'm going to X out. Right? We finally start rotating. It gave me a reason to jump back in. Then it rolls all the way back up to the highs because you're staying that long. I still want to be long, but I need to do it in a way that my risk is tolerable, because I have to understand in context where if this does break down, like I think we were talking about this at the time, and this just goes blam on the NASDAQ, all of a sudden it's down 400 ticks and your P&L has just gone red on the month. Those are the things that you have to be prepared for. That's why I like risking in percentages, because you can risk a significant amount less, and it's always variable. So when I'm looking at averaging in, I start small at the top. I want to build in, let's just use it out of 10. Let's say my maximum allocation is 10 contracts, just for easy math. If my max allocation is 10, when we get down to my area first, it's super early, we haven't seen necessarily any proof, I might buy 2, maybe 1. Maybe 3, depending on the context. I'm not going full bore, right? If you're looking at 3 contracts like you were talking about, then I'm going in with 1, and I'm just kind of sitting on hands. Like if it goes up, cool, I'll take my target at 2 to 1. Awesome, thanks. But if it doesn't, I'm still willing to build in more if it goes down into a deeper point of interest. And if it does that, then I've got a little more flexibility. With 3 contracts, you've got another 2 that you can play with. It's a little harder when you're under that, but I mean, you can get away with it. If you switch over to the micro, it adds even more flexibility. You pay a little more in commissions, but I digress. That's kind of the just understanding your max risk before you get into it, and knowing, once you start creeping up on that point, if your max risk is, let's say, a half of 1% on a $10,000 account, you're looking at a risk of $50. Maybe that's not feasible. Let's creep it up to like 300. Right? So that's a 3% risk. If you're risking $300 and you're sitting in, 2, 3, 4 contracts, your risk is relatively small, but you start seeing the P&L going into like negative 295, negative 280, 290, you're right at your barrier, right? That's where I start saying you pump the brakes a little bit. Like, wait a minute, this isn't where I wanted it to go. It's not doing what I wanted it to do. I need to pump the brakes, and I need to reevaluate my position. If I still want to stay long, then, reduce some size, but keep the net long position and start adding on a little bit lower, increasing your flexibility again. What a lot of traders end up doing, though, is they just hammer down on orders way too fast. They max out the risk, and then the market goes further. Well, if they've already maxed out the risk and the market goes further, then they just lost their account. That's what usually ends up happening with building in. So that's why I say the horror stories first before going into, the reasoning. But as long as you feel like you're at the point, that's good. I just, I like getting the warning out there first. Yeah, exactly, Bill. And sometimes in the end, it'll work, right? If you're willing to hold on for the whole move down, but that's tough, and sometimes you'll sit in there with 60% drawdown. I mean, it's brutal, but it'll happen if you're not prepared, or if you're not sometimes even quick enough on the NASDAQ with the nitrous strapped to the back of this thing, or if you over leverage, or etc. I had second to average down. If it's still going against me, then I hopefully find a level where it starts scaling with the third, and I get out if it goes against me on the third. Yeah, I'm kind of the same way, where unless I'm expecting something very specific, where I'll get in, kind of the same mentality of accumulation. You buy a little, goes a little further. Okay, that's fine. I was only expecting this to be aggressive anyway, but I think it's probably the safest way. If safe is the right word here. If you don't have money to replace your account, don't do it. Exactly. Yeah. Although, I think that's trading in a nutshell, but, you know. We thirsty out here, man. The world's falling apart. Let's do final call for questions and we'll wrap it up. Crude never pulling back. S&P never pulling back. NASDAQ never pulling back. The only pullback was the overnight. Go figure. NASDAQ's above the measured move objective. Again, keep an eye on that 1.5 distance. That's usually where they start bumping their head, and that's not until a little over 14K. 14,020s. Gold is up at the top of the channel now. What a move. And the euro, I mean, okay, we got that wedge break. We've got the move. They might be able to get that pullback down to the volume node, 19,640. If we're looking at it from a swing perspective on the drive down, the assumption is that it's got to hold on relatively strong. I don't want this churning against by too much. So realistically, it would make sense to have stop placements underneath a deviated L1. I really wouldn't want to see it go much further than that. And then as far as objectives go, if we're looking at this, let's see if we have to modify. 2 to 1's above settlement. That sucks. We're going to have to go down just a little bit. 19,630. That way 2 to 1 is back at the top. So the euro's got a potential 3-press wedge. We've got an undertow on the way down telling us to expect a deeper pullback anyway. We're hovering right around a zone of support. Makes perfect sense to find a bounce there, but if it goes too far, I don't want it. And that's it. Everything else just isn't stopping. I found out that if I go in big, I tend to close the trade fast. If it goes my way compared to slow DCing in, then I close earlier fills. Oh yeah, for sure. It's a psychological battle. And when you go in heavy, you feel it almost immediately. That's why I don't like going in heavy right away. Even when I'm building into the S&P, it's 1, then 2. I like building in on the way down rather than at the top because it throws your brain off. You exit faster because you're in your own head at that point when you're going in bigger size at the start. I would definitely agree, 100%. I was making 5K a day for 6 days in a row. 7th day lost 75 averaging in. Ran out of capital. Ninja closed the trade. Yeah. That's the risk that you run into. I mean, it's great when it's going. You know, that's what I'm saying. It works out phenomenally. You feel like you're on top of the world. Nothing can stop you until the market turns around and punches you in the teeth. Then you realize, oh, right. Pick myself back up. Find some new clothes since those just got punched off my body, and let's go from there. Ugh, and it's always the case, too. It's always the case. It's like, it's a whisper away. It's those shoulda, wouldas. Those are the ones that really pour the salt in the wound. No fun. Little bitty inside bar on the S&P 5-minute. This thing's just not going to pull back anytime soon. Eventually it will. Again, on the MACD, when we get that pullback, eventually, that would be the point of interest. Pretty far down here now. Might have to take a blow off. Either way. That's going to do it. As per the usual, you'll be able to watch this back pretty much immediately. Be able to rewind it and watch it from the beginning if you missed anything. If I missed any questions, feel free to shoot me an email. I'll get you covered from there. jhb@ssftg.com. Otherwise, though, enjoy, rest up. I hope you had a great day of trading, and we will see you all tomorrow morning, all right? Have a good one. We'll talk to y'all later. Thanks.